So if you look at the home ownership trend in the US, I think mid 2000s towards the crash, we approached that 70% mark. I think, if I'm not mistaken, we're at 69, 70% mark home ownership rate, which was extremely high.
Yeah.
And then we went down to the normal levels in the mid 60s, and I think that we're approaching that high all-time highs again. The rates were definitely a driver.
Yeah.
Also, there's the herd effect, right? So when your cousin buys and then in 6 months their home is worth 100,000 more, you feel like you're missing out, right?
Yeah,
So
for sure.
FOMO effect, right?
Yeah.
So you're like, oh, I want to buy a house, even though if you weren't thinking about it.
Yeah.
Now at those rates, and rates are still really low, right? Rates are still pretty good. But at those super low rates, everyone thought it's free money, might as well go and purchase a house. So that was one macro effect where the rates, the more localized, like in our in our market, in our let's say Los Angeles, there was a lot of money injection, right,
Yeah.
into the pockets of business owners, SBA loans. I had clients who would call me and say, got an SBA loan, I don't have to pay it back for a year, there's no payment, what do I do with it, right? So you're not supposed to be buying a home with the
Yeah.
SBA funds, right? Which is another podcast topic. I think someone who's
For
an
sure.
SBA specialist can tell you. But there's going to be a huge fallout from that because you're supposed to use the funds for
Business, yeah.
developing the business, not purchasing a home. So, and PPP money, and there's a lot of things in the news now, right, with PPP fraud. So in our local market, we saw a lot of effect from that, SBA, PPP. I had clients who didn't pay their mortgage for a year and a half. They went on forbearance. And they would call me and say, I saved $60,000. I've never had
Oh my God.
$60,000 in my account. And this is someone who bought their house with 30% down. And then unfortunately, government didn't create a qualification for it. They just
Yeah.
said, oh, you want to go on forbearance? No problem. Just fill out this form, sign here. You don't have to pay for a year, 18 months, 6 months, right? So whatever the period that bank gave you. So all this buyers, they had money now, right? So they come back and there's no repercussion, right? We used to have. You used to short sell your home and the lending rules would prevent you from getting another mortgage for at least 18 months. Now it's only 3 months.
Oh, wow.
So
Is that a recent change or?
no, it's when we were in the pandemic, that was the rule, right?
Okay.
It's a federally mandated rule, right?
Yeah.
So if you have a conventional loan, you have to abide by those rules. So if you were on forbearance, let's say you didn't pay your payment for 12 months, you can take everything owed and push it to the end of the mortgage. So let's say you owed the bank $50,000 and you had 25 years left on your mortgage. Now you'll have 27 years left on your mortgage. So it just extends your mortgage,
Yeah.
but it doesn't change your payment, which is fantastic if you're a
Yeah.
borrower. So, and then as long as you make 3 consecutive successful payments, now you can go get a new mortgage.
Wow.
And you have all that money saved in the bank.
Yeah.
So it put a lot of monopoly money in people's pockets, right? So between forbearance, between all the government assistance programs, all the tax credits, PPP, SBA, I think there's just too much injection of money into the industry,
And
into
that's
the market.
probably why the home prices shot up.
Right. So that was one of the factors. Obviously, so that's one factor. Rates are a factor. The other factor, which actually we saw a lot, and I heard it, firsthand, was people working from home. They realized how small their home is.
Yeah.
Right. So if you're a husband and wife with 2 kids and you're both working, you're barely home. So you never notice, my bedroom was smaller. I have
Yeah.
nowhere to put a computer, or I can't even fit a desk in my master, So it's like those things people realized that their neighborhoods matter. They can't go for a walk. They're home. So you go for a walk and you don't like your neighborhood, right? So those were also a factor. And some of these people were on the fence for years. They were waiting for something. I don't know what, but they were waiting and they realized, no, they can't. They need a home. So this was another factor. So there are a lot of factors, but I think those were the major factors.
Yeah, that totally makes sense. There were homes that were selling for over 100K over the asking price. So it was blowing my my mind, but with talking with you now over all those points, it definitely makes sense with all the
Right.
injection of money.
Yeah, I mean, luckily one of the, this is very unique to the US, right? Probably the only country in the world where you can borrow at 30 years fixed for nothing, right? Even at 4% is ridiculously low. So a lot of countries, you have to save up so much for just a down payment. So it prices a lot of buyers out of the market. We're
Yeah.
here, I mean, this year, we just raised the conforming loan limits again, right? LA County conventional loan limit is now 970,000,
Wow.
right? So imagine
That's
someone,
nothing in LA County. You can get like a studio apartment.
right? But this is a buyer who has only 3.5% down and can buy $1 million house,
Yeah, that's
right? This is
crazy.
unheard of, right? These limits just a couple of years ago, just 4 or 5 years ago, were in the 600s.
Wow.
So we went from 679 to 970 in a matter of 3-4 years, which
Is there like some kind of an income limit change with that, or it's the same person that used to qualify for 600 qualifies for
no,
9?
no. So that's the limit of where. Remember, I was saying the government will purchase the home, so
Yeah.
that makes it a conventional loan. Your
Okay.
income, you still have to qualify.
Okay.
So income, nothing major changes with respect to income. You still have to hold, you have to meet a certain debt to income ratio criteria. You have to have certain credit, right? So that aspect of lending hasn't changed much
Okay, that's
in the
good.
recent
That at
years.
least protects people that don't understand.
Right. Yeah. Yeah. So there's a lot of rules been implemented since the crash on predatory lending.
Yeah.
There were loans that were negative amortized loans, meaning every month you made a payment, your loan actually grew instead of shrinking.
Yeah.
So there are a lot of funky things back then, right? Zero down, interest only,
Yeah.
things like that.
We're
So
finally
now,
protecting the consumers.
right. Yes. Yeah. A lot of that comes with education. So the banks learned it the hard way, I guess, and then the consumers, same with the consumers. We have a lot of non-conventional loans now, and that's part of the market that I think is going to really grow in 2022 is non-conventional lending. So these are loans that the average bank doesn't have, the
Yeah.
government doesn't buy, right? And that's our portion of business that's growing on a daily basis.
And is that easier for the consumer to be approved for
Yes.
non-conventional?
Yeah, so because on those programs, we usually require more down payment.
Okay.
It's not 3% down, it's not 5% down. Usually you have put 10, 15, 20 or
Yeah.
more. That's why the rules are less stringent, but these are portfolio products, meaning the investor makes up their rules because it's their own money. They're not selling it to the
Yeah, of
government,
course.
so they have to meet that criteria.
And for those criteria that the investor is making, do you sit down with, whether it's the realtor or the consumer, whoever's buying the home directly, do you go over every point, or is it up to them to go over the contract?
No, it's both. So everything is over disclosed now, right? Since the crash of '08. So we disclose the loan terms at several points in the process. It's not a one-time notary.
Yeah.
It's several electronic disclosures, and then it's a print at the end, loan
for them to
document
take home.
package to sign with the notary every page and the initial. So there's a lot of obviously the more niche products are harder to understand. So we have to explain it to the client what it entails from beginning. There are still interest-only products out there, right? Some people prefer that. Those are usually now left for savvy investors who know what they're doing because they want to invest. They have cash flow goals, so they go interest-only, for instance, or they're going to flip the property in 2 years, so it doesn't matter
Yeah.
if they have ARM, adjustable rate mortgage, right? So, but they're not as prevalent as they were back before the crash of '07,
Okay.
'08. So yes, we have adjustable rate mortgages, but they're clearly disclosed. Consumer knows what their risks are. But again, usually those are the savvy consumer who knows what they want. They want a 5-year term because they're going to sell it in 4 years.
Thanks for watching, and make sure to subscribe and share this video for good luck. Actually, share this video to 2,022 people, and you'll have sold more homes by the end of the year than you could have dreamed of. Or break the chain and don't make any sales. Totally up to you.